Welcome back. Please help support this room by opening a trading account with one of our trusted brokers through the button below.
Hey. How we might this one run. This is my favorite. Alright, that's enough of that. Enough of that. But if you're asking what is my favourite of the epic musics, that one or the Gladiator soundtrack, probably up there is the two best. Gets the people going. Alright, so pretty big day. Now, analysts around the world and a lot of traders are waiting for this. Could be an anticlimax. I mean, percentages wise, I would say there's probably 50% of the outcomes tonight results in gentle US dollar selling. Yellen sticks to the script, doesn't commit to a Fed hike, leaves the door open, but is generally perceived as dovish. Now, in that scenario, pretty much what markets are forecasting, I think we get a little bit of a rally in stocks, a little bit of a rally in the pound, a little bit of a rally in the euro. Probably not too much selling in the dollar yen, probably, and all in all, a pretty much much ado about nothing reaction. That doesn't mean it's not set up for some easy trading. Perhaps that we are going to get some trending against the US dollar next week if she does just come out as expected, but as resulting of like a serious reaction tonight. The only serious reaction tonight is if she pretty much not just opens the door on the September rate hike, but suggests it is their main default view, and only a weak, non-farm number would stop them. So if the markets come away with that perception and the chances go from 25% to, say, 60%, 70%, then you would see dramatic US dollar buying, right? And dramatic, probably initial reaction anyway, dramatic selling in stock markets, which have been teetering. The dollar, especially the US stocks, teetering after such a big rally. It's like, well, if you give it a reason to shunt it lower here, it's probably going to pull back substantially, right? And I would count that maybe as 20% likely, and then say the other 30% is where she's a little bit more hawkish than expected, and there's some US dollar buying, not dramatic, but not enough to say break serious levels. Okay, so there's the real. I don't think she's going to come down on surprisingly dovish side. She can't really be surprisingly dovish from her current situation, but I don't think the so 50% pretty much small US dollar selling, 30% small US dollar buying, 20% dramatic US dollar buying. And I'm pretty much set up here for US dollar selling. Okay, so I think that she's going to be sticking to how she normally reacts, normally speaks, and we are going to get that US dollar selling. We've got some exact times. It is 12 Australian midnight time that it's coming out, so that's 5 hours from now. 4 hours, 50 minutes to be exact. And we do have confirmation that Kuroda's not speaking, so he's probably just there as a participant. Doesn't mean they won't get headlines over the weekend from him, especially if the BOJ wants to embark on something new. That's sort of forum where you might get that sort of headline come from. So Nikkei early on Monday might, the dollar yen might be moving if they release some stories to the Nikkei press. So keep an eye on that Monday morning or Sunday during your time if you're in the US, night time. BOJ is gearing up for something. We're just not sure what. There's been a few rumors rumbling, and this time, if they decide to do something, they're probably not going to underdeliver, right? You'd expect them to try and do something substantial to change that trend. Even the expectation of what I just talked about might be enough to lift dollar yen. If the US dollar is also weak at the same time, then you'll have those really sharp moves in the euro yen, pound yen. That's just, I'm looking forward now. I'm looking forward post Yellen. Really, we've got to get past Yellen first. But that's just addressing the Kuroda issue. All right, now, slight selling of these stocks, especially the DAX. I mean, a lot of traders trade the DAX, and so it's one of the pairs that we have to look at each day. And a lot of my clients were like, "Well, are we buying it?" I mean, look, this sort of pullback, this sort of consolidation, does the same thing that for a market that a substantial pullback does. So say we're just playing, I don't know, majority of pairs when they rally, you might get a pullback to say the 61%. Okay. Alright, so you might get a pullback all the way to 10.2. This time though, what we've seen is multiple pullbacks where the market's been bought. Alright, but the amount of these selling days, right, could have easily pushed the market down to that 10.2, right? So in some regards, a sideways action on the market is the same as a correction in terms of, what causes the correction? It's the longs bailing, right, and being replaced by new buyers on the dips. So it's in a normal trend, uptrend. All right, so maybe there was people here who were expecting a pullback to 10.2 to get that perfect entry, but only got so far this 10.5 test, which is a pretty key level. A break of it one day, but multiple tests of this 10.5, and at the same time you're absorbing a lot of that profit taking, and so the sideways action is actually a form of correction. All right, so consolidation for a significant period of time, like we've got here for the last 2 weeks, is the same as a deep correction in terms of what is necessary for us to make that next move higher. All right, so conditions have been met for that next move higher, and buying is pretty safe as long as Yellen doesn't wreck you. All right, so the 20% chance here that Yellen comes out, talks about rate hikes, Dow gets smashed, it'll take down the DAX with it. Okay, but if it doesn't, then you should get gentle buying, and it should continue past 10.8 to 11,000. That's just everything being stable. All right, so yeah, it's not the worst level to be buying, and the amount of time passed has sort of risen the level that you would be buying. Here I'd be only considering a sharp pullback to be buying on a dip. Here I'm like, and now I'm getting the feeling that was the low. Okay, so this trade is starting to be more attractive. We were waiting for a long time here to get a pullback, then we never really got into. So yeah, I mean, attempting to buy at 10.5 makes sense, and you could get substantial rally here. So and also, right, if Yellen is dovish or perceived as dovish, and we're sitting here at say 10.620 next week on Monday, at the same time we're doing this speech, that's extremely bullish. We're buying, right? We just continue to add to that, and so we'll work with what happens this week. But on Monday next week, depending on how it closes, what she says, then we're looking to buy. I mean, even if Yellen's ultra aggressive, right, and the market pulls back, I'm probably looking to buy at some point too, maybe 9.8. Yeah, in sort of crashy type move as the market gets wrecked a little. So don't start that chart. So the way that we're playing it in our accounts are we're long the euro, short the dollar CAD, and we're not heavy, just quarter positions, but we're happy with that sort of exposure. Pretty tight stops though on the dollar CAD. Bring up the dollar CAD. Alright, pretty tight stops, I think 129.70 ish. But we are hoping to get a big chunk of a trend lower here on the dollar CAD, so 129.70. We're hoping to get a move to 125. Okay, so the risk reward is there. We just have to see that last little support give way, and also just keep a close eye on what's going on with oil. And oil is not the most reliable partner. And we could just ditch the CAD next week and go straight to buying Aussie, which brings up that trade which is causing us most concern, which is that Aussie Kiwi. I mean, if the Aussie starts to do its rally, resumes its uptrend, this should do stabilizing, at least start to do some 104, 105 action, and we might be able to lighten up a little because we got in wrong timing here. This rebound up to 115, 110 that we're talking about didn't really happen. We're buying here, right? This is our trade. After the RBA cut, we're like, yeah, we're into that, and then so these two actually the trades that I ended up buying at the start. These are the ones added on the dip there, and now we're like, oh god, not again, Aussie Kiwi, where are you going? So hopefully, if it does bounce back up, except that the timing of this RBNZ RBA divergence trade is not there, and that it's probably going to take later in the year when the RBNZ's closer to cutting again. You know, Wheeler fucked up by saying that they're not looking to cut rates rapidly. So now we've got to wait for the next inflation numbers out of New Zealand to put pressure on the Kiwi, and it's still months away. So in the meantime, while the Aussie, say the baseline scenario is that the US dollar gets sold as September is priced out, New Zealand dollar is probably going to go towards that 75 level, and the Aussie's got to grind up to that 78.50, and so there is potential for the Kiwi to continue to outperform. Alright, so it's not the time to be involved in the Aussie Kiwi, which is just a race between those two other majors, when you can see, the default scenario is that the Kiwi's going to outperform, unless there's something surprising comes out from New Zealand, from the RBNZ to try and stop it. And it's not strong enough for intervention warnings. Later in the year, if the Kiwi just continues to go crazy, then yeah, we might get those intervention warnings again, like we got in 2014, but not yet. So we'll just play that by ear, and that's not going to be affected too much tonight by the Yellen. Post Yellen, I might be looking to add to the Aussie. Aussie is the trade which makes the most sense to me. It's consolidated. It's similar to like the DAX, right? You consolidate a lot of the downside, and it's ready to that next move. It just needs that green light from the US dollar. So if Yellen comes out as forecast to be dovish with the chance of a hike this year, data dependent, that sort of stuff that she says, and we see a spike here to 76.65, because it's not going to be a huge reaction to topside. Looking just to buy with the flow on the, hopefully next week we can get past that, break 77.50. Don't get the RBA until the week after. Alright, so even though we've got NFP next week, we don't get the RBA till the week after. And RBA is unlikely to cut again this year, and if so, only reluctantly. So it would have to be a pretty dismal inflation number. And even then, you've got the new RBA governor saying in our press that we're really only looking to make decisions on a quarterly basis, and we're only sort of buy and hold. Wait and see mode at the moment. So RBA's threshold for cutting is a lot higher than the RBNZ. Australian interest rates are 1.5%. RBNZ is as New Zealand interest rates are at 2%. New Zealand has forecasts of 2 more cuts though. Alright? For the next year there is pricing of half a cut from Australia. So maybe we go to 1.25. But just the RBNZ cutting down to 1.5 is a dramatic difference in the yield difference between Australia and New Zealand. So that's the basis of that Aussie Kiwi trade. It's just we have to be really ready, just aware that pair doesn't play nice, and that it can continue to go down, may even go to parity. All right, but at some point, if the RBNZ is cutting to that same level as Australia, then it has that. It's a very easy argument to see at some point when we're rallying for that to be given as the reason, and for that Aussie Kiwi squeeze to begin, and for us to go back to those more normal levels, 110 to 120, where it spends 80% of its life. It's just having a little holiday down here. It's not comfortable down here. The Kiwi people from New Zealand be like, what's wrong with your currency? Can I come over there, mate? Help you out. You have some sex, fish and chips, mate. I don't know, I'm bad at the New Zealand accent, but they say six. But when we say six, they say sex. DRCPD, he knows what I'm talking about. Well, I'm not going to train him completely. I mean, I'll teach you a little bit, right? But it takes a fair bit of work, Sabano. I mean, not a fair bit of work, but I mean, it's going to take a year, right, to get your game up to the right level. The plan eventually with clients is to have them have a dialogue with you about the market rather than you explicitly tell them what to do. Jay's asking, what's my plan on the Aussie Kiwi? I just told you my plan, man. To get out. To get out and wait for the timing to be right for that divergence trade. You know, maybe RBNZ does a better job next time. But yeah, no, to get out on a bounce towards 105. Take a loss if I have to. Not really comfortable hedging down here. Not really comfortable closing at 104 either. So we'll see what the next little rally does, where we get to. But yeah, this is just as wrong. If I had a trade journal, it'd be like, rule number 1, don't trade the Kiwi. Don't predict the RBNZ. Don't try to predict the RBNZ. Rule number 2. But yeah, no, it is what it is. I mean, that pair's given me a lot of pips. I'm still well ahead. It's just this one I was wrong. I was greedy actually. I was seeing 115. Oh, that divergence trade makes so much sense. Next 6 months we're just going to rally up, and then every dip's going to be bought as, you know, rate forecasters talk about the difference between RBNZ and RBA lowering. But the market's just not ready. It's more searching for the yield at the moment, and the Kiwi's got the highest yield. So until it's closer to the cutting time, which is 3 or 4 months away, then there's no reason to be involved in that trade for that reasoning. It's not a technical trade. Yeah, so yeah, look, I'd be happy to be buying higher today. You know, that sometimes it's like, well, buying high is a little risky. Yeah, it is, but you know, we'll see. We'll see how it plays out. Data-wise, other than the Janet Yellen speech, there isn't much to get excited about. There's a second reading of this Q2 GDP that shouldn't do a big move unless it's dramatically different. It's forecast to be slightly lower than the initial print, but probably not going to get the market going crazy. Can you hear the sound, Jay? That's what we're saying, man. Oh, fucking Joel Kruger, he's long Aussie Kiwi. Killer, he's long Aussie Kiwi. A lot of analysts are long Aussie Kiwi. It's a trade which makes sense, but it's just wrong. Timing's wrong. Divergence, yeah, I mean, there should be divergence there at some point coming. You talking RSI divergence, or what are you talking there, Allosaurus? I swear I've seen Joel Kruger talking about buying Aussie Kiwi at some point on his Twitter stream. Let's have a little look. Twitter check. Joel Campbell. So Joel Kruger. So it works at LMAX now. It's been around a few brokers. Let's see what he says about the Aussie Kiwi. Actually, let's see what he says about old Jalen. It's a little old Potter, but yeah, let's have a little look at what his rant is. It's gonna be same shit, right? Everyone says the same thing. Arvind says it's gonna cut. Let's have this one's from a couple of days ago. I am Trade Wizard. Wait. Listen. So he's a bit more of a tech trader as well, but let's see what he's saying about his long Aussie Kiwi trade, because he's in the same sort of boat. So the problem with these trades are he's short Kiwi US dollar, he's long dollar US dollar CAD, and he's short the stock market. He's basically taken a view which is only going to work out for him if Yellen is hawkish. Yeah, I mean, I'm not sure if he's still in these trades, but that is dangerous. Okay, because there's correlation between all those trades, and he could get killed or make money on all of them together. And so it is You know, it is a dangerous way to trade when you increase your leverage basically on the same trade idea, which happens a fair bit actually. Oh, I don't want to buy any more euro, I'll buy some pound. I've got enough Aussie, I'll buy some Kiwi. You know what I mean? It's the same sort of trade, right? Don't think that you're limiting your risk. This is not diversified, you know, stock portfolio here. We're talking about long or short US dollar. Okay, you're adding US dollar shorts basically. But it is he knows that. He's just giving trade ideas because his people pay. He has to. We'll have a little look at the fundamentals now, a little bit of bank reports as well. I mean, my view is pretty clear what I think is going to happen. Yellen's going to be yelling, and we're going to get US dollar weakness. But, I mean, the chances are real or something else, right? This is pretty much the time, if you're a central banker and you do want to change direction after those last two strong NFP reports, you know, the way that you would do it, especially if you're the Fed, is that you would send out Fisher and Dudley first, and then back it up with Yellen coming in. Yeah, I mean, she can't be over the top, but she's going to try and, you know, finally balance it maybe. So, you know, it makes sense probably if she does do it as well. And what she might do is put the burden off her and say that we're going to look at the next piece of unemployment data, right? If she blames it on the next piece of unemployment data, then it's out of her hands, right? She's forced to if it's strong. And if it's weak, she has the ability to delay. All right, so, but you know what I mean? Like it's a pretty attractive option for her to let the data do the work for her rather than make the decision and rock the market. So I can see, you know, what should happen. The argument against that, though, is that they did start this ramp up a little late. Dudley and Fisher did come out and do it, but you know, usually they want to telegraph it a few months ahead of time, and this time they've left it, you know, last couple of weeks, and so there will be disruption to the markets by the change in those short-term yields if she comes out full hawkish tonight. You know, saying it's a done deal if the unemployment data continues to be strong is the ultra strong response, right? So I can see both sides, and maybe in hindsight next week we'll be like, oh, we should have been more alert to Yellen coming out and being hawkish. All right, but it's you know, that'll be us rewriting history, right? Her history, which is more reliable than us talking about what she should do and might possibly do from a tactical point of view. Her history is dovishness. So it is I think smarter to go with that, prudent to go with that. So Morgan Stanley is on the same page as me. They've been this way for a couple of months. Very, very dovish on the US dollar. So let's have a little read of what they're saying here. There's this term that they use a lot. It's not in this report, but it's in some of the reports. The Yellen's going to try and buy optionality. So optionality is just Fed speak talk for giving them the ability to raise rates. And then in the market, you know, optionality is basically increasing the money market rates to a high percentage chance. Now, if she can do that, then that gives her more options going into the announcement and takes some sting out of our hike. Yeah. But I think she's done that too late to even do it, even at this Jackson Hole. Because, you know, what's changed in the last month since she spoke? Not too much. So this report's saying that the percentage is now up to 32%. Okay. Here we go, giving the Fed optionality. You know, the other thing is, if there is a 32% chance, right, there is more ability for the US dollar to be sold, because that has to go to zero, right, in the situation where she doesn't announce the hike, or where it's so low that it's just a possibility but not a reality, not a probability. And so if there is 25% hike going into the announcement, then you know that still provides you with a pretty decent kick of US dollar weakness if they don't do it. Probably learnt more about the Fed than we have. A lot of traders have learnt more about the Fed in the last week than they have ever before. Oh, okay. BAJ Kuroda is speaking on a panel. Alright, so not speeching, but he's do Q&A stuff, right? The dollar yen's a pretty good one to get involved in here, actually, if there is some hawkish tilt. Like a little bit of a tilt, not the full-on hawkish reaction, because dollar yen doesn't do that well if stocks crash, right? So if there's that 30% chance where she's more hawkish than the doves expected, which is the majority of traders out there, then you might get a little bit of a US dollar bounce, right? And then if Kuroda, if you want to be strategically long dollar yen into the weekend, just in case Kuroda says something crazy, say you're buying at 170 or 180, then you got pretty good risk reward, right? That it will gap higher, similar to the start of this week. Nick Jordan, I'm not sure about Nick Jordan. He's very technical, and I don't like that style. But this is not written by him. This is just something he's posted in this room. Just looking for the EMR if it's out today. this is a bit hectic. I'm going to have a look at this later. It's going through some of the tools that the BOJ can go in the September 20. Alright boys, not much else in there worth having a look at. So, I mean, let's just play it by ear. I'm going to be in the room at 12 o'clock. We're going to see how our trades do. There's a lot of potential trades out there, guys. So, you know, I'll call them out if I do any. There's a few scenarios where I don't do any, but I'm looking at some nice patterns developing. I'm going to stay away from pound though. That is one thing I've made my mind up. Selling dollar CAD, buying euro, looking to buy DAX when she's dovish, and buying dollar yen if she's hawkish. Alright, is any other questions? What are we laughing at? That guy's little rant about day traders. He didn't say anything in that post. It was just the guys who win again, and it's really hard to make money. Yeah, okay, we know that. Quick check of some of the traders' ideas in the room. Yeah, we're not traders. We're not day traders. Buying dollar yen if she's hawkish ex Shiraz. Mildly hawkish. Not hawkish enough to rock the boat, but hawkish enough to make people go, ooh, that's surprising. Buying DAX in most scenarios. Buying euro in most scenarios, and buying dovish to heavy dovish. Just buy. Bad news is bad. Good news is bad. Are we in that mode again, aren't we, Potter? Nothing's taking it down, so it must be going up. I don't know. I mean, at some point it's a big correction, but there should have been one already. This is a pretty good trade. I like it. I like the levels. But it is all to do with Yellen, so it's not so much you can trust the market popping above these SMAs. Alright, Kiwi dollar. We're long with a stop at 92, okay. And we're targeting 73.30. Not too bad. It's a bit short term. Silver long. Yeah, I mean silver's going to be a beast if she comes out. Yeah, gold is actually surprising, right? Gold is what is going on with gold? Gold is doing in. I mean, I'm lucky I don't trade gold. Right, but gold is just crushing traders at the moment. Euro's going up and gold's going down. I mean, look, it won't be able to escape today's movement. If she's dovish, gold will go up, but maybe it doesn't go up to those levels to get people out that have been buying at, say, 1340. We'll see. But this one does seem relatively cheap if you're US dollar bear. But I don't like that price action we had this week, and it's notoriously hard to trade. So I'm going to leave it alone. Good luck to you if you're buying it, though. I mean, if we're sitting here next and it bounces back above 13.31, maybe it's worth a buy. Buying dollar yen. He's buying a little late. He's buying a little high. But he's selling. Okay, he's selling. Alright, he messed up when he put it in the yeah, selling makes a bit more sense, right? Yeah, he's gonna get like. I like that trade. I also like the Aussie dollar trade. That's a nice trade. Alright guys, that's enough for today. I'll be in the room though later. It's gonna be the first time that I've done some active trading in a while, so hopefully we all make some money. But, you know, I will go into give my reaction there and try to explain what's going on if the market's going crazy. But yeah, good luck and trade safe, right? Use stops.